Today we are going to discuss the cost sheet in cost and management account. It is one of the most important topics in cost accounting as such because cost is concerned with ascertainment of cost. So in order to ascertain cost sheet really helps us in finding out what is the cost per unit. We know that cost can be divided into various groups, like we can classify that as production cost. So when we talk about production cost, what do we have? We have the direct material which gets involved in the production. We have the direct wages or the workers which are giving their time to produce these goods. Plus we have some production overheads. You may call them production overheads or factory overheads, or you may call it manufacturing overheads or works overhead. So if you're manufacturing something or producing something, you may call that production, manufacturing, and works. Or if you are doing some other work, you may call it a works overhead. Like if you are extracting some minerals from the quarries, then you will not call it production, you may call it works overhead. What is contained in works overhead or production overhead or factory overheads is the indirect expenses related to production. And what they would be generally, for example, your factory building. If it is on rent, the rent of factory building. Otherwise, if you are the owner, depreciation of factory building. To produce good, we use fuel, power. We may use some lubricants in order to produce goods. Machines get depreciated. You may have to pay some royalty fees. There may be some layouts or drawings which are used in production. Right? So these are some of the expenses which goes as production overheads. Then there are office and general overheads. Or office and administration overheads. What would they be? Related to production? The office building which is used, it may be depreciation on that. The printing, stationery that may be used. Furniture which is used, that may be depreciated. So there are certain general and office and administration overheads. Then you have selling and distribution overheads. Here you may have the salaries of salesmen. You may have the advertisement expenditure. Then you can have for distribution, transportation. If you are using your own vehicles to distribute goods, depreciation of vehicles used to transport these goods. There could be secondary packaging here, which is used to move goods to the markets. Primary packing would come under your office overheads or administration overheads. And primary packing may also be part of production overheads. So these are some of the ways in which you can distribute. These are the expenses which are classified as which goes into producing the goods. So we can use these expenses and we can create a cost sheet. So when you prepare a cost sheet, first thing is that we divide the cost into certain parts, like what is the prime cost of producing a good? Prime cost would comprise of direct material, direct wages, and direct expense. Once you have the prime cost, you add to this factory overheads, which we have discussed what they can be containing. And if you have received any scrap value or anything after selling some wastage, that can be reduced from the factory overhead. So if there is anything which you have got in return, that should be deducted here. So when you add the factory overheads, you get the works cost. To this works cost, when you add office and administration overheads, right? And you end up getting the cost of production. And on this, when you add the selling and distribution overheads, you get the cost of sales. Any general overheads which are allocated to this particular product, like the director's salary, etc., this will also be added in after the selling and distribution overheads. So this is your total cost of product. So when we prepare a cost sheet, we write the total cost and we also calculate the cost per unit. So this helps us in finding out what is the cost per unit of manufacturing a product or to sell a product. However, when you talk about direct material or works cost or cost of production, there is one concept that goes of the stocks. So we have seen that when you prepare your financial records, you write down all your stock, whether opening or closing, and whether of raw material, whether work in progress, or finished good. You may have the opening and closing stocks of all these three categories of inventory. And in financials, we see that we write the opening stock on the debit side and the closing stocks on the credit side of all the three raw material, WIP, or finished goods. But when you're preparing a cost sheet, you will see that the opening stocks and closing stocks will have different places where you have to make an adjustment. So let us say that you have opening stock of raw material. To this, you add whatever the raw material you have purchased in this period. We have talked about when you look at the material purchased, we have seen it in the materials chapter that any direct expenses related to material purchased, like freight or duties which are not refundable or no credit is available, or taxes, they should be added to the cost of material purchased. Any rebates that you get or anything which is deducted, discounts that are deducted should be subtracted from this. So you add the material purchased and you subtract the closing stock of raw material. So when you have adjusted your opening stocks and closing stocks of raw material, you end up getting the material consumed, which is the direct material. Okay. So we have seen this direct material. How does it come? Opening stock of raw material plus whatever purchased, all expenses which are incidental to material purchase, less closing stock of raw material. This will give us the material consumed. And this is your direct material. So once you have the opening and closing stocks of raw material adjusted and you get to the raw material consumed, then you add factory overheads. Then you add the labor and direct expenses. And then you end up getting the prime cost. So the opening and closing stock of raw material is adjusted here. And when you add to this, you get prime cost. To prime cost, you add factory overheads and you get the works cost. This works cost may be called as the gross works cost. And here you adjust the opening work in progress, inventory, and subtract the closing stock of work in progress. This gives you the net works cost. And when you add office and administration expenses, you get cost of production. To this, you add opening stock of finished goods and subtract the closing stock of finished goods. When you do this, you end up getting cost of goods sold, which is the cost of production of goods sold. So far, if you've been manufacturing 1,000 units, all the expenditures that you have is on 1,000 units. After you have adjusted the opening stock of finished goods and closing stock of finished goods, now whatever the expenditure is incurred on those units which are sold, not on what you have produced. So far your expenditure was what you have produced. But from here onwards, your expenditure will be on whatever you have sold. So if you had, for example, finished goods unit, opening units 200 and closing stock of finished units was 300 units. So your cost of production was for 1000 units. When you added the 200 units of finished goods and subtracted 300, now you have the cost of production of 900 units. 1000 plus 200, 1200, 1200 minus 300, 900 units are actually sold. So the cost of production of 900 units you have now. So when selling and distribution expenses are incurred, let's say if it is 3 rupee per unit, then that will be 900 into 3, 2700. So selling expenses, if they are given per unit, they will not be incurred on 1000, they will be incurred on 900. If I say that the raw material cost was 1 rupee per unit, that will be taken on 1000 units. Wages are 2 rupee per unit, that would be taken on 1000 units. Direct expenses are 1 rupee per unit, they will be on 1000 units. So any expenditure which is there, till your adjust the finished goods opening and closing stock is on 1000 units. But once you have adjusted the opening stock of finished goods and closing stock of finished goods, you get the cost of goods sold or the cost of production of goods sold. When after that any expenses incurred, which is selling and distribution expenses, that should be charged to units sold, not on 1000 units which are produced in this period, right? So this is how we create a cost sheet. This is the performer for a cost sheet, and we have different places where you adjust the opening and closing stocks of raw material, work in progress, or finished goods. So we have to remember that. And in cost accounting, how you value your closing stocks or how you value your stocks generally can be FIFO or weighted average. If nothing is mentioned, you may follow any of the two methods and you can mention that you have valued your stocks using FIFO or weighted average. There are other methods also which we have done, but you will use either of the two when you're doing the practical questions on other chapters, right? So let us look at how we prepare a cost sheet. A factory uses a job costing system. The following cost data is available from the books for the year 31st March 2019. You are given direct material, you are given direct wages, profit is given, selling and distribution overheads are given, administration overheads are given, factory overheads are also given. So you're required to prepare a cost sheet indicating how much would be the prime cost, works cost, production cost, cost of sales, and sales value. So in this particular question, it's a very simple question without any opening and closing stocks. So let's quickly look at this part of the question first. Cost sheet for the period or for the year ending 31st March 2019. The number of units are also not given. So we will calculate the total cost, prepare the total cost sheet, and will not calculate the cost per unit. Your first expense is direct material. 9 lakhs. Then you have direct wages, 7,50,000. Profit is given. We are not interested in that now. Selling and distribution overheads will come later. Administration and factory overheads all will come later. Okay. So there are no direct expenses here. So this becomes your prime cost. 16,50,000. Add factory overheads now. Factory overheads are 4,50,000. You end up getting your factory cost or works cost. As the question is specifically saying calculate works cost, so you will name it works cost. So 16,50,000 plus 4,50,000, 21 lakh becomes your works cost. To this you will add administration overheads related to this product, which is 4,20,000. This becomes your cost of production or cost of goods sold. Same here because there are no stocks given. 25,20,000. Add to this selling and distribution overheads, which is 5,25,000. This becomes 30,45,000. This is called cost of sales. And now you will have either profit given. If profit is given, you can find out the balancing figure as sales by adding up the profit. Or if sales is given, the balancing figure would be your profit. In this question, profits are given as 6,09,000. Add profit, 6,09,000. So sales comes out to be 36,54,000. This is your cost sheet together with statement of profit, right? You may also bifurcate. You may prepare a cost sheet. So your total cost of sales will come out to be 30,45,000. And after you have prepared the cost sheet, you may prepare a statement of profit separately. So when you prepare the statement of profit separately, you will have opening stock of finished goods will be shown here. In this question, there is no opening stock of finished goods. Add the cost of production for this period, 30,45,000 less your stock of closing stock of finished goods, sorry, which is again not there here, nil. This will give you your cost of goods sold. To this, you will add the selling expenses. So your cost of production is this. Till this point, you will have your cost sheet, 25,20,000. And when you're preparing a statement of profit separately, opening stock of finished goods plus cost of production less closing stock of finished goods, you will have cost of goods sold. And then you add the selling expenses and you will have profit and sales. So you may bifurcate the cost sheet into two parts also, a cost sheet separately and a statement of profit separately. So if you bifurcate it only till the cost of production, this part goes to the cost sheet, and then whatever you have in the remaining part, that will come as under the statement of profit. But generally we follow just one. Until and unless is specifically asked, we will not bifurcate it into cost sheet and statement of profit. Now, what is asked in part B? It said that in 2019-20, the factory has received an order for a number of jobs, and it is estimated that direct material would be 12 lakh rupees. Direct labor cost would be 7,50,000. What price would you want to charge for these jobs if the factory intends to earn the same rate of profit on sales? So whatever we had earned in the previous period, the same rate of profit we want in future, but there is a change, and the change is that the selling and distribution overheads has gone up by 15%. So it is asking us to find the total sell price for a job where direct material is 12 lakh, labor is 7,50,000, and rest all the expenses are same, but the selling and distribution overheads have gone up by 15%. And we want to earn the same rate of profit. The factory recovers factory overheads as a percentage of direct wages. So we have done the chapter on overheads. We can say that overheads can have a recovery rate or an absorption rate. So here the factory overheads are absorbed on the percentage of direct wages, and administration and selling overheads are absorbed as a percentage of works cost. So based on the cost rates which are prevalent for the previous year. So we have prepared a cost sheet here for the previous period 18-19, and we have seen that what was the factory overheads. It was 4,50,000. And we have also given that the factory overheads are absorbed as a percentage of direct wages. So first we will find out what these absorption rates are. Factory overheads. Absorption basis direct wages. So factory overheads for the period 18-19, 4,50,000. And what was direct wages in this period? 7,50,000. So what's the absorption rate? 4,50,000 divided by 7,50,000 into 100. So factory overheads are to be absorbed at the basis of 60%. Then administration and selling distribution overheads are as a percentage of works cost. How much is the works cost here? 21 lakh. Administration overheads, 4,20,000. Four lakh 20,000. And works cost is 21 lakh. The rate becomes 4,20,000 divided by 21 lakh into 100. So it is 20%. Selling overheads, again, basis percentage of works cost. How much is the selling expenses? 5,25,000. Works cost is 21 lakh. What is the rate? You can type the answers in the chat window if you're using your calculators. This is equal to 25%. So we have established the three rates, right? Factory overheads are 60% of direct wages. Administration overheads are 20% of works cost, and selling overheads are 25% of the works cost. But you will see that the selling overheads have increased, right? Yeah. Selling and distribution overheads are a percentage of works cost, and there has been an increase in selling and distribution overheads by 15%. Okay. So now let us create a worksheet or a cost sheet for 1920, where the raw material cost would be 12 lakhs and the labor cost would be 7,50,000. One more thing we will have to calculate as a working note. What is the existing rate of profit? Existing profit percentage, or what was the profit percentage as a percentage of sales in the previous period? Why? Because we want to have the same rate of profit on sales as it was there in the previous period. So what the profit is 6,19,000, and 6,19,000 divided by 36,54,000. 6,09,000 on 36,54,000. If we'll calculate, I think it should come out to be 16.66%. Just check it out. So the profit is 16.67%. Now, when we apply this calculations to our 2019-20 for the various jobs which we have got. So we'll prepare the cost sheet again, but we will not, this time we don't have the factory overheads, we don't have the administration overheads, we don't have the selling and distribution overheads as a percentage. We have it only, we don't have the absolute value. Yeah, 1/6 would be better because 16.66% is a round off, like 16.6666. And when we round off to 16.67, there can be slight difference. But when you use exactly 1/6 in your calculation, you will get exact answer. Good. So when you prepare the cost sheet, this time our direct material is 12 lakhs. Right? And direct labor is 7,50,000. So the prime cost comes out to be 19,50,000, although the labor cost remains same. Add to this factory overheads. I'm just writing FO for factory overheads at the rate of 60% of direct wages. So 7,50,000 was the earlier also. The wages were same, and 60% of 7,50,000 would be 4,50,000. So your works cost comes out to be 24 lakhs this time because the raw material has increased. To this, you will add administration overheads, which is at a percentage of 20% of works cost. Right? We have established the rate 20% of works cost. And there is no increase in administration overheads. So 20% of work cost is 2,40,000, 20%, 4,80,000. So your cost of production comes out to be 28 lakhs 80,000, right? On this, you will add selling and distribution expense. They were 25% of works cost, but whatever they will come out to be, you can prepare a working note for selling and distribution again. So first you will take 25% of works cost. Works cost is 24 lakhs. 25% of 24 lakhs will be rupees 6 lakh. Add increase at the rate of 15%. So another 90,000 will increase from 6 lakh. Remember, it's not an increase in the absorption rate. 25 plus 15, not 40%. But whatever the 25% absorption rate, selling and distribution expenses turn out to be, on that you will add another 15%. So 6 lakh plus 90,000, selling expenses will be 6 lakh 90,000. So your total cost of sales comes out to be 35 lakhs 70,000. To this you will add profit. Another working note. Profit is required at 1/6 on sale, which can also be taken as 1/5 on cost, or 16.67 on sales is equivalent to 20% on cost, right? If one part is profit, 6 is sales. How much is the cost? 5. So profit as a percentage of cost becomes 1/5 as a fraction of cost. Or if you want to say, use your unitary method, the ones which you have learned in 7th and 8th class, cost and profit, selling price, cost price. So you can say, let the selling price be X or 100. Profit is 16.67 on 100. So profit is 16.67 rupees. Therefore, cost is 83.33. Therefore, profit on cost is 16.67 divided by 83.33, which will come out to be 1/5. Now, 1/5 profit becomes 35 lakh 70,000 into 20%. Comes out to be 7 lakh 14,000. So when you will add this profit, Your total sales will be 42 lakhs 84,000 rupees, right? Any questions? Uh, 5 by 6 of sales, I didn't get. Okay, 5 by 6 of sales is 35 lakh. Yeah, that's okay. Any questions or is it clear? This will come just below this only, not separately, okay? Cost of sales is 35 lakh 70,000 plus profit 7 lakh 14,000. Therefore, total sales is 42 lakh 84,000. Yes, Sumit, what's your question? Sumit, you can type in the chat window whatever your queries. If you are unable to unmute yourself. Sumit, are you not able to speak? So please put it in the chat window, whatever your queries. All right. So I have hope you have understood what the basic question, what is the cost sheet, how it is prepared, how you apply the various overheads to the cost sheet, and they can be applied as a percentage on some basis, and how you adjust the opening and closing stocks. Now I take up a few typical questions where you might have to find out some missing figures. Okay, let's look at this question. The books of Adarsh Manufacturing Company present the following data for the month of April. So this data is only for the month of April. The direct labor cost is 17,500. Labor cost is how much? 17,500. And this is 175% of works cost, works overhead, sorry. Okay, please calculate profit again for part B. Profit was taken as 16.67% of sales, which can also be said as 1 by 6 on sales. When you will divide 16.666 by 100, you will get 1 by 6, right? So we have been told that in part B, we want to earn the same rate of profit on sales as was there in 2018-19. So how much was the profit on sales? 6,09,000 on 36 lakh 54,000. This fraction will also say 1 by 6 or which is equal to 16.66. Now, to calculate profit, which is given as a percentage of sale, but you have in your hand not sales, but cost. So it's very easy to calculate this. I'll show you in a blank sheet. So if it is said 5% on cost, 5% becomes a fraction as 1 by 20. So on sales, this means one part is profit, 20 part is cost. So what will be the selling price? 21. So it becomes 1 by 21 on sales. If it is 8.33% on cost, 8.33% as a fraction is 1 by 12. So it will become 1 by 13 on sales. If you say 10% on cost, 1 by 10. it becomes 1 by 11 on sales. Let's say 12.5%. That is 1 by 8. It becomes 1 by 9 on sales. 15%. It is 3 by 20 as a fraction of 100. 15 on 100 is 3 by 20. So it will become 3 by 23 on sales. 16.66. 1 by 6. 1 by 6 on cost. 1 by 7 on sales. 20%. 1 by 5 on cost. 1 by 6 on sales. 25%. 1 by 4 on cost. 1 by 5 on sales. 33.33%. 1 by 3 on cost. 1 by 4 on sales. 40%. 2 by 5 on cost. 2 by 7 on sales. Right? So if you want to go from cost to sales, add the numerator denominator and that becomes the new denominator. But if you want to go from sales to cost, subtract the numerator from the denominator. That becomes 20. This becomes your new denominator. Numerator remains same. So 1 by 6 on sales is 1 by 5 on cost. Right? So it was 1 by 6 on sales. So we calculate it, but we don't have the sales figure. So we can calculate 1 by 5 on cost. Cost was available to us 35 lakh 70,000. So 1 by 5 of 35 lakh 70,000 is 7 lakh 74,000, which is then when we added it to the cost of sales, it gave us our total selling price or sales value, which is 42 lakh 84,000. Here, if you will look at 6 lakh 9,000 on 30 lakh 45,000. See how much it comes out to be as a percentage. You will find out as a fraction it is 1 by 5 and as a percentage it is 20%. Why 774714? You are calculating what? I think you are calculating in part B. Our total cost of sales is 35 lakh 70,000 and we want 20% on that. So 774,000. Yeah. What is your answer? 774. Why 714? Okay. It is possible you are using 16.67%. So we said if you use did I do a wrong calculation? Just let me check. 35 lakh 70,000 multiplied by 0.2 or 20%. 714,000. Yeah, okay. 714,000, right. Profit will be 7 lakh 14,000, not 774. I might have written it as 714, but when I read it again, I mistook it one as 7. Okay, so 35 lakh 70,000 plus 7 lakh 14,000. When you will add it to 35 lakh 70,000, the sales figure will be 35 lakh 70,000 plus 7 lakh 14,000. It's 42 lakh 84,000. Sales value is correct. So 714 is the profit. That is what we have added, but just I might have read it 774. Okay. So hope it is sorted. Let's move on to question number 2. The books of Adarsh Manufacturing presents the following data for the month of April. Direct labor cost is 17,500 and this is 175% of the works overhead. So this will help you calculate your first working note. Works overheads are 17,500 divided by 175%. into 100%. So you can also say 117,500 divide by 175 into 100. So your works overhead will come out to be 10,000. So you will, when you multiply 10,000 by one, or you do take the 175% of 10,000, you end up getting 17,500. So labor is 17,500, whereas works overhead are 10,000. Then the cost of goods sold, excluding administration expenses, is 56,000. The cost of goods sold, excluding administration expenses, is 56,000. And you are shown the following inventory accounts. Raw material, opening balance is 8,000, closing balance is 10,600. Work in progress, opening balance and closing balance. Finished goods, opening balance and closing balance. Selling expenses are given. General and administration expenses are given, and sales is given. You are to calculate the value of material purchased, and then you have to prepare a cost statement showing the various elements of cost and the profit earned. All right. So I hope this is clear. First, let us prepare the cost of goods sold, or cost of production or goods sold is given to us here as 56,000, right? Now, what makes up cost of goods sold if you exclude the administration expenses? How do we get it in the cost sheet? We start with direct material plus direct labor, which is given to us 17,500. But material is not given, that's a question mark. Prime cost comes out to be, once again, a question mark. Add to this works overhead, 10,000, and you get your works cost. But again, this is a question mark so far, right? So what is the information that we have so far? That works overhead are 10,000 and labor is 17,500. These two information we have put on. After this, we add administration expenses and we get the cost of goods sold. But here it is very specifically said, cost of goods sold excluding administration expenses is 56,000. So we'll have to work backwards. Total cost of goods sold is 56,000. From this, and how do we calculate cost of us the labor? That will give us a total of prime cost. Plus we will add to this works overhead 10,000. 28,000 is 500 is the material consumed. Then how much is the material purchased? You have the opening stock of raw material and you have the closing stock of raw material, 8 and 10,600. So material consumed is opening stock This is your material consumed, which is equal to 28,500. So when you will solve for this, purchases will be equal to 28,500 plus 10,600 minus 8,000. purchased becomes 31. Wait, we also have the finished goods. So cost of goods sold, excluding administration expenses, is 56,000. So first we'll have to take this into figure. 56,000. This is administration expenses are not included here. Cost of goods sold. But cost of goods sold will have, so how much will be the finished goods? Add opening less closing. Opening finished goods is how much? 17,600. And closing finished goods are 19,000, right? 17,600 and 19,000. That means from cost of goods sold, we first need to reach cost of production. So in this question, look at this. Direct labor was how much? 17,500. Works cost is also something we know. We have calculated as direct labor is 175% of work overhead. So works overhead comes out to be 10,000. We have got only these two information, nothing else. Only the opening and closing stocks are given as closing stock of finished goods, right? Okay. So your cost of production in this period is 57,400. Right. Now, what does cost of production comprise of? It comprises of direct labor cost. Material plus labor is prime cost. Add to it works overhead. To this, when you will add opening WIP minus closing WIP, you will end up getting total works cost. So opening stock of WIP and closing stock of WIP is 10,500 and 14,500. Okay. And to this you add administration expenses and you get your cost of production. However, in this question, it is very explicitly said that cost of production without include cost of goods sold is 56,000. And so far we have not taken administration expenses. So we will ignore this. So to this, when you add opening stock of finished goods and subtract closing stock of finished goods, you get your cost of production or cost of goods sold. So this figure was 56,000. Now from here you have to work backwards. Closing stock of finished goods is 19,000. And this is 17,600. So this is to be added and subtracted, you end up getting this. So when you will move backwards, 56,000 plus 19 minus 17,600, this gives you cost of production 57,400. Since administration expenses are not included, this becomes your works overhead, works cost. Okay. To this, when you have added 10,500 and minus 14,500, then you reached 57,400. So now again, when you will work backwards, you will have gross works cost as 57,400 plus 14,500 minus 10,500. So this becomes 61,400. Okay. So here you are 61,400. Now this 61,400 is after adding direct material, direct labor, and works overhead. So in this, we don't have material information, but rest everything is there. Labor is 17,500 and works overhead are 10,000. It gives you 61,400 as the gross works cost. So when you will subtract 27,500 from here, you end up getting your material consumed, which is equal to 33,900 rupees. And how do you get the material consumed? Opening stock of raw material plus purchases minus closing stock of raw material. This is your material consumed or direct material. So now you have to find out this missing figure. Rest everything you have. Material is 33,900. Closing stock of raw material is 19,000, 10,600, and opening is 8,000. So how much should be the raw material purchased? 33,900 plus 10,600 minus 8,000. So your raw material purchased is 36,500 rupees. Okay. Value of raw material purchased 36,500. Now you have to prepare a cost statement showing the various elements of the cost and profits earned. Now it becomes easy. So you prepare a cost sheet. Either you can say opening stock of raw material 8,000 plus purchases 36,500 less closing stock 10,600 33,900 is the raw material. To this you will add labor 17,500. Prime cost comes out to be 51,400. Add to this works overhead 10,000. 61,400 becomes gross works overhead, works cost. Add opening WIP, which is 10,500 minus closing WIP 14,500. This becomes your works cost. So it is 61,400 minus 4,000. 57,400. You will add now opening finished goods. This is your cost of production because we are to ignore administration expenses here. So add finished goods. Finished goods opening is 17,600 and closing is 19. Minus closing So cost of goods sold is 56,000. To this, you will add now administration expenses and selling expenses. Why administration would have been excluded? Because they may be a part of general administration expenses which have been allocated to this and which are not specific to the product. So 3,500 and 2,500. 62,000 becomes your total cost of sales, and selling prices, sales value is 75,000. So your profit would be 13,000. Is it clear? So it is a question where you had to work backwards. We were given cost of goods sold and that too excluding general administration expenses. Okay. Is it clear now? So from first cost of goods sold, after having adjusted the finished goods, we will find out what is produced. As closing stocks are more than opening stocks, so production is 1,400 more than cost of goods sold. So 56,000 plus 1,400, 57,400 is your cost of production. Now, once you know the cost of production as 57,400, this comprises of direct material, direct labor, works overhead, and adjustment of opening WIP and closing WIP. So when closing WIP and opening WIP is adjusted, we find out that after having adjusted the closing stocks, we found out that the gross works cost comes out to be 61,400. 61,400 comprises of direct material, direct labor, and works overhead. So this gives us the missing information on material consumed. Once you know the material consumed and opening and closing stocks of raw material, you will be able to find out material purchased. So material purchased is 36,500. Now all the missing information is there. How much is the material opening stock of raw material? Material purchased less closing. So material consumed 33,900. Labor is given. Add the two, you have the prime cost. Works overhead are given 10,000. Add the two, you have the gross works cost. Add opening WIP less closing WIP, you have the net work cost, which is also your cost of production, as administration expenses are not to be taken, right? Sorry. So as administration expenses are not to be taken, so your works cost comes out to be your cost of production. To this, you add opening stock of finished goods less closing stock of finished goods, you get cost of goods sold 56,000, which is given. And when in this cost of goods sold, you add the general and administration expenses and selling expenses, your total sales cost of sales becomes 62,000. When sales value is deducted from here, you get the profit. Administration overheads are not given. The word used is general and administration overheads. So when you have general administration expenses, it means that they are not specific to the product. They are maybe like overall related to office expense or overall related to director salary, which is just a portion of which is allocated to this particular product. A sharing of the general overheads. That's why administration expenses are excluded. Okay, so we will ignore any administrative expenses related specifically to the product while preparing the cost sheet till cost of goods sold. So until 56,000, we have no administration expenses, will not assume. Look, only material, labor, works overhead, and adjustments of opening and closing stocks of raw material, WIP, and finished goods. And here we are at 56,000. Right. Let's look at one more question. Again, a little bit related to some missing information. A fire occurred in the factory premises on 31st October 2023. Accounting records have been destroyed. They were kept in, but certain accounting records were kept in another building. And this gives you a following information from September 1 to October 31st. So 2 months information you have. Once again, how much was the material purchased you have, and you had the opening WIP, opening stock of material, and opening stock of finished goods. Indirect manufacturing expenses are 40% of the conversion cost. When you talk about conversion cost, what is conversion cost comprised of? Let's say you have certain material which you convert into finished goods. So by the time you convert your raw material to finished goods, what is the cost that you generally incur on this? It is labor or wages and your production or factory overheads. So this becomes finished goods. Okay. We have seen till works cost, it is finished goods, right? This is your conversion cost. So conversion cost is given, and it is mentioned that indirect manufacturing cost. So production overheads are given as 40% of conversion cost. Production overheads are 40% of the conversion cost. So if conversion cost is 100%, it comprises of labor cost plus overheads. And overheads are labor, we don't know, but overheads are 40% of the conversion cost. So it implies that the labor cost is equal to 60% of the total conversion cost. Okay. Sales revenue is given and direct manufacturing labor is given 222, 250. So now this was in percentage. If I express it in numbers, absolute rupees, 100% I don't know because I don't know what is the overheads. But I know that labor cost is 60% and it is 2,22,250. So if 222,250 is your labor cost and it is 60% of the conversion cost, so you can find out what is the total conversion cost, 2,22,250 divided by 60%. So you can divide by 0.6, which will give you what is the total conversion cost. Prime cost is also mentioned here. Okay, and gross margin is also mentioned here based on revenue, 30% of the revenue. And cost of goods which is available for sale is 555,775. So this is another question which will tell you what are your total costs, right? And to calculate backwards whatever the information we have. This loss is fully recovered by insurance company. The insurance company wants to know the historical cost of the inventories as a basis for negotiating a settlement. Although the settlement is actually to be based on replacement cost, not historical cost. So the insurance company is asking us, we'll give you the insurance claim, but for that, we want to know what is the historical cost of finished goods inventory, work in progress inventory, and raw material inventory. We have the opening stocks, but we don't have the closing stocks, right? So settlement is actually to be based on replacement cost, which means the price at which the same goods will now be brought back to the factory. If I buy a product for 10, okay, 10 becomes my historical cost. But if you ask me that you want to buy this product, if you say, I want this product, I say, okay, you can have it. But if I'll give it to you, I'll have to buy another for myself. And if I give this to you and I have to again buy the same product for myself because it was important to me. And now if I go and buy it and I get it for 13 rupees, so 13 rupees becomes the replacement cost. So the insurance company said, whatever you have lost, we are ready to compensate that. And we are ready to compensate it at its replacement cost. But to calculate what should be the replacement cost, we are trying to find out. We'll base it on some estimate on the basis of historical cost. So they want to know what is the historical cost of inventory so as to be able to negotiate the settlement price, which is to be actually based on replacement cost, not historical cost, but they want to have an estimate of this. Finished goods, WIP, direct material. Look at this data, look at the information you have. Can you figure out a bit how you are going to calculate the missing figures of closing inventory? Again, cost sheet will come into our help. Okay. Cost sheet will be our information. Through that only, we will have to calculate the closing stocks. You have the cost of goods available for sale. You have the gross margin percentage based on revenue. You have the prime cost, which means direct material, direct labor. You have the direct manufacturing cost. So even if you just simply write down, draw a cost sheet pattern, direct material, consumed. So you will have opening stock of raw material. If you get this type of questions in an exam, what you can do is simply prepare the cost sheet and whatever the missing information is there, just paste it. Okay. And whatever the information you have, just put that. You will find out how you have to reach the answer. Less closing raw material. This will give you material consumed. To this value will add direct labor. You end up getting prime cost. To this you add works overhead. Add opening WIP. You can give it a name here as gross works cost. Less closing WIP. You get works cost. Add okay. No administration expenses are given to us and no selling and distribution expenses are given to us. Okay. So we will assume them to be nil. So this becomes your cost of production. To this you will add opening finished goods. So before I subtract the closing finished goods, we have a specific name here, cost of goods available for sale. So when you add to the cost of production opening finished goods, you end up getting cost of goods available for sale. Whether or not you have sold or not, that's different, right? So this is what is available for you for sale. And from this, you will subtract closing finished goods, which will give you cost of goods sold. And then you have the last two things, profit and sales, right? So just put in the just put in the figures that you have here, and you will exactly know immediately how you will solve this question. Ma'am, could you please clarify me when to use replacement cost and historical cost while you will use raw material? In our examples, we will only use the historical cost. We'll never use raw material replacement cost. It is just a name which has appeared here because insurance company is saying we'll compensate you for 13, not 10. So it was important that I explained to you what they mean. But they are saying find out the historical cost so that we use it as a base to calculate the replacement cost for negotiating the settlement price. So they want this. So technically speaking, this entire information is irrelevant here. Even if the question, although the settlement is actually based on replacement cost or not historical cost, it is totally irrelevant for me as part of the solution. Okay. But you should know what it means so that in exams, if you have a different language, you could at least understand what they're trying to say. And you know that it is irrelevant. We will not use the replacement cost here. It is not relevant. They're asking, just find out the historical cost of inventories so that the insurance company can negotiate a settlement. So in our information, for sure, we are trying to figure out uh, this is missing, this is missing, and this is missing, right? But we have some figures intermittently. Let's put them. Material purchase, 2,50,000. Opening raw material, we have that, 20,000. So unless we have this information, we don't have this information. So this also becomes a question mark. Labor information we have, uh, direct manufacturing labor, 222, 250. So unless we have the direct material, we will not have the prime cost. Works overhead, we don't know as of now. We need to do a working note to calculate that. Opening WIP we have. Opening WIP is 40,000. Closing WIP is very relevant. We need to find out. So unless all this information is put to us, we can't find the works cost. Cost of production, we don't know. Opening finished goods, we have 37,750. And we also have the cost of goods available for sale, 555,775. Closing finished goods, we definitely don't have. But we have the sales revenue, 7,50,000. And we have the prime cost also, sorry, 397,750. Prime cost is 397,750. So we have sales revenue and gross margin percentage based on revenue, 30%. So we have this information as 7,50,000 and 30% of 7,50,000 is 2,25,000. So we figure out what the profit is. And when you subtract the profit element from sales, 7,50,000 minus 2,25,000. So closing finished cost of goods sold is 5,25,000, right? So if you look at this entire thing, see what is the information we have used here. We have used direct material purchased. We have put the values of opening WIP, opening finished goods, and opening direct material. Indirect manufacturing expense, we will use it. Sales revenue, we have put in the cost sheet. Direct labor, we have put in the cost sheet. Prime cost, we have put in the cost sheet. And because of sales revenue minus 30%, it gives us cost of sales or cost of goods sold and cost of goods available for sale. 3 working notes we will need. First, sales we have put minus 30%. Profit is 30% of sales. So we calculated 2,25,000. Give it a working note. Cost of goods sold is 5,25,000. Therefore, now you will get your first information. How much were the goods available for sale? 555,775. And how much you actually sold? 5,25,000. So what happened to the rest? They becomes your closing stock of finished goods. 30,775. Finished goods inventory is 30,775. Okay, right? So the last part was easy. 7,50,000 was the sales. Profit is 30%. Therefore, cost of goods sold is 525. Whereas it is given in the question, goods available for sale was 555,775. So out of 555,775, if you have sold only 525, that means your closing stock was 30,775. 3775. And just see 555,775 minus closing finished goods. So cost of goods sold becomes 5,25,000. Okay. So once you have 37,750 as your opening stock, go backwards. Cost of goods available for sale is what? Whatever you've produced plus opening finished goods, which is given. So this will give you cost of production, which is equal to goods available for sale minus opening. So if you have 5,55,775 available for sale, out of which if 37,750 was already your opening finished goods, it means your current cost of production is 5 lakh 10 51 lakh 80,000 25. This is your works cost or current cost of production. Okay. So we have reached so far. What is your works cost? It is 518025. Once again, direct material, we don't know. Direct labor, we know as 222,250. And prime cost also, you know, which is 397,750. Is there any difficulty in calculating what is the raw material consumed? Prime cost minus direct labor will give you material consumed. So it becomes 397,750 minus 222,250. Raw material consumed is 1,75,500. Now, if this figure is 175,500, Can you find out closing stock? What is purchases? Purchases will be equal to consumed plus closing minus opening. So what is closing? Closing is opening plus purchases minus consumed, right? Purchases plus opening minus consumed. So opening is 20,000, purchased is 2,50,000, and consumed is only 1,75,500. So this means your raw material closing stock is quite high, 2,50,000 plus 20,000, 270 minus out of 670, 175 is only consumed, 175, 500. So your closing stock of raw material is quite high as 94,500. Okay. For last, what is your WIP? So you have your prime cost as 397. So this you want to add the work overhead in this year, how much you have incurred. Now here was this information that prime cost and direct material again. Okay. This is the simplest part here. Prime cost is given as 397, 750, which is a combination of material plus labor. Material consumed is not given, but labor is given as 222,250. So using the missing figure, you get 397,750 minus 222,250. So 1,75,500 is the raw material consumed. When you know the raw materials opening stock, 40,000. 40 is the opening plus purchased is 250 minus closing is your material consumed 175,500. Okay. So you will find out what is the closing stock of raw material 2,90,000 minus 175,500. Opening raw material is not 20. Opening raw material is, yeah, sorry, 20, not 40. 40 is WIP. So 270 minus 175 is 94,500. Is it clear? So your prime cost is given, labor is given. So it's easy to calculate the raw material consumed. And once raw material consumed is given, it's easy to calculate the closing stock of raw material. The whole question comes on to conversion cost. Conversion cost, indirect manufacturing costs are 40% of the conversion cost. Okay. So whatever the total conversion cost is, 60% of it is the labor cost and 40% is the indirect labor thing. So we found out that uh, labor cost is 60% and it is 2,22,500. So when you divide 222,250 by 60, and if you will multiply it by into 40, you will find out what should be the indirect manufacturing cost. 222,250 divide by 60 into 40. So 148,167. It's 148,166. I have rounded off to 148,167, right? So this information also you have, right? Now what remains? Only one thing, closing work in progress. So 397 plus 750, 397, 750 plus 148167. This becomes your gross works cost. To this you add 40,000 as your opening stock of WIP. So your this figure so far becomes 5,85,917. And from this you will subtract the closing work in progress and you will get 518025. So 5,85,917 minus 518025 gives you the closing stock of work in progress. This thing. So this is 67892. Okay. I'll quickly recap. What is given to you is the three opening stocks: material purchased, sales, profit as a percentage of sales, manufacturing labor, prime cost, and cost of goods available for sale. So first, 7,50,000 minus 30% will give you cost of goods sold. Okay. First step is cost of goods sold is equal to sales minus profit. You can calculate it. Both information is easily available. 7,50,000 minus 30%. 2,25,000. So 5,25,000 is the cost of goods sold. Cost of goods available for sale is given. A term which means we are talking about produced plus opening stock of finished goods. And cost of goods sold is what? Opening plus produced minus closing. Opening plus produced is the same thing as cost of goods available for sale. Now we have two information here. COGS is 5,25,000 and cost of goods available for sale is given as 5,55775. Let's say X. So you can calculate what is the closing stock of finished goods. It comes out to be 5,55775 minus 525,000. So 30,775 is the cost of finished goods inventory closing. Another important thing, as you have the prime cost, you have easily calculated how much is the material consumed. Now, when you have calculated the material consumed and opening raw material is given, plus purchases is given, minus closing we don't know, and consumed we know as 175,500. So opening was 20,000, purchased was 2,50,000. So this gave us very easily the closing raw material, right? 94,500. So in this whole question, 5,55775, this gives us the closing finished goods. And then you have the cost of production during the year. Cost of production comprises of prime cost, which is given, plus works overhead. And opening stock of WIP and closing stock of WIP adjusted. So every information you have now, 518025 is what is your production. 175, 222, 397 What is remaining is works overhead. How you calculate the works overhead? For that, this information is given that manufacturing or works overhead are 40% of the conversion cost. Conversion cost means labor and overheads. So if 40% is overheads, labor is 60%, and labor is given as 222,250. So if 222,250 is 60%, what is 100%? You can find out 222,250 divided by 60%, and then you can calculate the 40% of it to find out manufacturing overheads. When you put the manufacturing overheads here, plus opening WIP, and the closing, less closing will give you 518025. So when you solve this equation, you end up getting the closing stock of WIP. 585917 minus 518025. Okay. Is it clear? Let us take up one more question. This is again of a different type. A company manufactures radios sold at 1600 per unit. The total cost comprises 30% material, 40% wages, 30% overheads. So we have the sales value here as 1600. It must have some profit element also. Before this, we have total cost. And whatever is the total cost, we don't know, but it comprises of material, wages, and overhead. So let us assume the total cost as X, profit as Y, and that gives us your sales, X plus Y. Okay. But the total cost comprises of 30% material, which means 0.3x, 40% wages, 0.4x, and 30% overheads, 0.3x. So your material, wages, and overheads are 0.3x, 0.4x plus 0.3x, 3 plus 4 plus 3, 1.0x. And let's say profit is Y. So sales is 1600. Sales is always equal to cost plus profit. And you have first equation like X plus Y should be equal to 1600. Further, it is said that there was an increase in material price by 30%. Okay. Now, the price of material has increased by 30%. The wage rate has increased by 10%. So in the forthcoming year, you expect an increase in material by 30% and in the wage rate by 10%. And as a result, the profit at current selling price may decrease by 40%. So it's not saying anything about overheads. So we assume 0% increase in overheads. So there will be some new cost and there is a profit reduction by 40% if we keep the sales price constant at 1600. So increase 0.3 by 30%. Use. So increase the material cost of 0.3x by 30%. It will be 0.09. So new material cost will be 0.3 plus 0.09, 0.39x. Increase the wages by 10%, 0.4 into 10%, 0.04. So the new wages will be 0.44x. Keep the overhead same. So it will still be 0.30x. Now the total cost becomes 1.13x, profit becomes 0.6y, and the selling price is still the same. Okay. Is it clear? A manufacturing company manufactures radio sold at 1600. Cost is 30% material, 40% wages, 30% overheads. So 100% cost is this. Selling price is 1600, but we don't know what the profit is. So let's say total cost is X and profit is Y. But in the forthcoming year, there would be an increase in material cost by 30%. Wage rate will increase by 10%. And as a result, if you still keep the selling price constant, the profit will reduce by 40% per unit. So let's see what will be the new cost. Material will be now 0.39x. Wages will be 0.44x. Overheads will be 0.30x. So the overall cost will increase by 13%. So the total cost, which was 1x earlier, will now be 1.13x. The profit will now be 0.6y. It will reduce by 40%, but the selling price remains same. So we get two equations here. First equation is x plus y is equal to 1600. And the second equation is 1.13x plus 0.6y is also equal to 1600. Okay, you can use any of the method you can use to solve your simultaneous equation. I'll bring the two figures together. I'll multiply equation 1 by 1.13. So you will have 1.13x plus 1.13y is equal to 1600 into 1.13. 1808. And now we'll subtract equation 2 from 1. You end up getting 0.53y is equal to 208. And you find out the value of y, that what was your existing profit? 208 divided by 0.53, 392.45 rupees. You require to prepare a statement showing current and future profit and present selling price at present selling price. And the second part is how much will you increase the selling price to maintain the same percentage profit. We'll come to that later. So far you have solved this. So now when you will put the corresponding values, y is 392.45. This was 1600. So if 1600 is sales, 392.45 is profit. Therefore, earlier the cost was 1207.55. You can call it 1208 and you can call this one 392 also. But let's, for now, I'm keeping decimal still two fractions. Now, 0.3 of this is how much? Your overheads cost was 362.26 and your raw material price was also 362.26. Whereas wages were 483.01. So this was your existing or the last period's cost sheet. Material rupees 362.26, wages 483.01, overheads 362.26. Total cost would be 1207.55 and sales value is 1600. So profit was 392.45. Now let us also calculate 392.45 as a percentage of cost. Why? Because it's saying how much selling price should be increased to maintain the present rate of profit. So I'll keep the profit as a percentage of cost. So 392.45 divided by 1207.55. The profit is 32.499. Here I can round off 32.50 percentage of cost. Now what has happened? Prepare the current sheet at revised prices. So material will now be, earlier it was P62.26. Now it has increased by 30%. So now the material cost will be 470.9445. Wages 483.01. This has increased by 10%. It will become 531.311. Overheads remains same. So the total cost now is this much. One three 64.51. I'll keep it 0.50. And you will see that if sales value is still the same as 1600, your profit is only 235.5, right? And you will see that 235.5 is only 60% of 392. Okay, but we want to keep the profit same as 32.50 of cost. So add profit at the rate of 32.50% of cost. That will be 1364.5 into 32.5%. Now the profit will be 443.46. Okay. So your new selling price should be 1808, right? This I have just shown to verify whether at existing sales price has the profit reduced to 60% of original, which is verified. That means all calculations are correct. And now you find out the new selling price. Okay, which you also would see is the same answer as in this equation. So if everything increases by 13% and you keep the profit percentage constant, you will end up getting a selling price of 1808. Right? Last question we will discuss today, and then we'll take up a case study. A manufacturing company has an installed capacity of 1,20,000 units per annum. If you have any doubt in the previous, please ask now. Okay, so let's discuss this. A manufacturing company has an installed capacity of 1,20,000 units per annum. So 1,20,000 is the installed capacity per annum. If you are working at 100% capacity, then only you will be able to produce 1,20,000 units in a year. The cost structure of the product manufactured is as follows. Variable cost per unit, materials is 8 rupee per unit. Labor is also 8 rupee per unit, but it is subject to a minimum of 56010 per month. So if you are manufacturing 1,20,000 per annum, your monthly production at 100% capacity should be 10,000 units monthly, right? Which will give you your labor cost as 10,000 into 8, 80,000. So what it is saying is if the labor cost is getting anything above 56010, so we will keep the labor cost at that level. But if let's say you did not operate at 100% capacity, you operated at only 50% capacity, so you will end up making only 5,000 units, right? Monthly, and 5,000 into 8, your labor cost will come out to be 40,000. So will the labor cost then be 40,000 rupees? No. In that case, we will have to take the labor cost as 56010 because minimum it is going to be this. If you recall the labor chapter, we have talked about that the labor being given some kind of returns, maybe based on Halsey plan, maybe based on Rowan plan, but we guarantee them at least some wages. So the minimum wages that labor will get per month is 56010. So what I can do is I can divide 56010 by 8. This gives me 7,001.25. So if I'm going to, now I'm not going to manufacture the units in fraction. So if I manufacture anything, any units above 7,002, so that means if I'm working at above 70% of my capacity or 70.02% of my capacity, I'll pay the labor at 8 rupee per unit. Otherwise, I'll take the labor cost as 56,010 per month. Break-even point is coming out at 7,001.25 or 7,002 units. So if I'm going below 7,002 units, my labor cost will be fixed 56010. But if I go above 7,002 units or 7,002 or more, then my labor cost will be 8 rupee per unit variable. Overheads are 3 rupee, and that there are also fixed overheads 168,750. There are semi-variable overheads also 48,000. So you have overheads as variable overheads 3 rupee per unit, fixed overheads at 168,750, and there are some semi-variable overheads 48,000 per annum if you work at 60% capacity. But if you increase the capacity beyond 60%, if you work at, let's say, more than 72,000 units in a year, 120 into 60%, 6,000 units per month or 72,000 units in a year. So if semi-variable overheads are 48, which increases by 6,000 per annum, if you increase the capacity for 10% capacity utilization. So if you are 60%, it is 120. If you are 70% or above, 70%, then it is 48 plus 6, 54,000. However, this increase will be there for every 10%. And it will be for the year as a whole. That means once you increase your capacity to 70%, you will charge the semi-variable overheads at 54,000 per annum. If you increase the capacity to 72%, another 10% increase, anything beyond 70%. So another increase or 80%, then it will be 54 plus 6, 60,000 for the whole year. Okay. So the capacity semi-variable expenses will increase by 6,000 for every 10% increase or any part thereof. So even if it is 61, the overheads will be 54,000 for the year. Even it is 70.005%, then the overheads would be 60,000 for the year. 6 plus 6, two increments of 10 by both the 10% of fraction. So they'll increase two times. 6,000 plus 6,000, 12,000 for the whole year. So 48 plus 12, 60,000. Another increase, 80.1, then it will become 66,000 for the whole year. Now let's see at what capacity you have worked. The capacity utilization for the next year is 60% for the first 2 months. 60% means 6,000 units for the first 2 months. Then 75% for the next 6 months. 75% means 7,500 units for the next 6 months. And for the 80% for the remaining part of the year. So 8 months have gone, another 4 months, 8,000. So this is what has been your production throughout the. We have seen that the labor cost would be how much? Anything below 7,000, it's fixed at 56,010. So in these 2 months, labor cost will be 56,010, and in the remaining months, it will be 8 rupee per unit. So how many units have we manufactured? Let's see, 8 into 4, 32,000 here, 7,500 into 6, 45,000 units here, and 12,000 units here. So in totality, he has manufactured 45 plus 12, 57, and 89,000 units. If the company is planning to have a profit of 25% on selling price, once again, 25% on selling price, 1 by 4 on sales, 1 by 3 on cost. Assuming what should be the selling price? Assuming there is no opening and closing stocks. So material cost is 8 rupee per unit, labor cost is 8 rupee per unit, and overheads is 3 rupee per unit. So let's see, output is 89,000. Raw material cost, 89,000 into 8. Labor cost, working note, 56010 into 2 for the first 2 months. Plus, then here you have manufactured 12,000 units, 6,000 plus 6,000, 12,000. Out of 89, when 12,000 is subtracted, remaining 77,000 units will be charged at 8 rupee per unit. Overheads, all these are totally variable. 89,000 into 8, into 3. Sorry. Is it okay? So all the variable expenses have been mentioned. Material at the rate of 8, overheads at the rate of 3, whereas labor will be different. Labor will be 56,010 per month for the first 2 months, and for the remaining months, it will be calculated at 8 rupee per unit. Because here, if I calculate 8 rupee, it comes out to be 48,000. 48,000 is less than 56,000. So I'll still have to give 56,010. Okay. So 883. Fixed overheads are 168,750. Now talk about variable over semi-variable overheads. They were supposed to be 48,000, but because you have increased the capacity twice, once you worked in some part of the year at 75%, 75% is again 2 times 10% increase or a fraction thereof. So one time 10% increase would have been 70. Then we would have kept it at 48,000 plus 6, 54. But there is a two-time increase, another 75 and 80. And it is saying whenever there is a 10% increase or any part thereof. So even if 1% increase beyond 160 will cause the semi-variable increase to increase by 6,000 per annum for the whole year. So we have not to take it as a fraction that we will take semi-variable expenses at 60% for the 2 months. And then for here again, we will take it at 60,000 for the remaining. No. So it has to be 48 plus 6, two increments, 60,000. So let's calculate this first. Material cost comes out to be 89,000 into 8. 71 lakh 20,000. 7 lakh 12,000, sorry. Labor cost is 77,000 into 8 plus that's 6 lakh 16,000 plus 56,010 into 2. Labor cost comes out to be 7 lakh 28,020. Variable overheads are 89,000 into 3, 2 lakh 67,000. Our total cost comes out to be 2 lakh 67 plus 7 lakh 28,020 plus 7 lakh 12,000 and plus 1 lakh 68,750 and another 60,000. 19 lakh 35,770. And we have to add profit, 1/3 on cost. We can also say 25% on selling price is 33.33% on cost. So it's 6 lakh 45,257. I'll round off this time. And therefore your sales value should be 19 lakh 35,770 plus 6 lakh 45,257. Okay. This is how you will attempt the questions on cost sheet. I have taken the typical illustrations, which were unique in some way. Other simple cost sheet you can prepare. Important thing is to be able to identify which item of cost goes to prime cost or works cost or overhead. Let's take this case scenario. SpeedX Automotive Private Limited is a well-known manufacturer of automotive components, focusing on producing high-quality fuel-efficient engine parts and transmission systems for commercial and passenger vehicles. Strong presence in the Indian market and expanding footprint in Southeast Asia. The company has established itself as a reliable supplier in the automotive industry. Headquartered in Pune, Maharashtra, it is dedicated to meticulous cost management and strategic financial oversight, ensuring operational efficiency and profitability. So when you read the case study, try to mark anything which is relevant because in exam you will be short of time. Therefore, ensure after having read this first paragraph seems to be totally irrelevant for any practical calculations. Okay. Now, SpeedX Automotive Private Limited allocates significant investments to direct costs, the lifeblood of their manufacturing process. I told this irrelevant, but don't always start skipping the first, reading the first paragraph. They 90% it might be just bringing up the introduction or so. However, it might contain something relevant also. Read it carefully. Once you have read it carefully, then you can mark it. No important information is to be retrieved from here. Now, the company spends rupees 1,30,000 on purchasing direct material, ensuring the quality of material meet high standards. Ignore. Direct labor, a critical component, 90,000. So far from entire paragraph, what I have come across is material 130, labor 90, and direct expenses 30. Okay, 130, 90, and 30. Overheads cost are another crucial aspect of SpeedX automotive financial strategy. Factory overheads account for 60,000, covering all indirect manufacturing expenses. Administration overheads are managed at 20,000, and selling and distribution overheads are managed at 10,000, ensuring the products reach the market effectively. Quality control, vital for maintaining the company's reputation, is allocated to rupees 5,000. So quality control is, as it is not specific to this particular product, allocated here. So I'll not put it as part of cost of production, but I'll put it as part of selling expenses. Similarly, research and development also uh, highlighting their focus on innovation. So these are some of the other costs which I'll add after the selling overheads. Because research and overheads is also not to be charged in one particular year. The benefits of research and development are reaped over many years. Now, inventory management is key to SpeedX Automotive's financial health. Opening stock of raw materials stands at 50,000. Work in progress starts at 15,000 and increase to 35,000, indicating a smooth production flow. Finished goods maintains an opening 30. Opening finished goods is 30 and closing finished goods is 25. Opening raw material, opening WIP, closing WIP. Okay. So this paragraph talks about opening and closing stocks. However, the closing stock of raw material is missing here. So I look at this one. The company spends 130 on purchasing direct material. So 130 is not material consumed, it is material purchased. Throughout the period, SpeedX Automotive's manufacturing expertise is evident as they successfully produce 4,000 units and 3,800 units are sold at a price of 100 per unit. Additional information. Price of raw material fluctuated. At the beginning of the period, it was 10. Midway, it was 12. And company could only purchase 10,000 units at 10 rupee per unit. Raw material consumed was 14,000 units. Company follows FIFO method of inventory valuation. Okay. We have given how much is the material purchased. Right? Material purchased is for rupees 1,30,000. Prices fluctuate. Some of it was purchased at 10, some of it was purchased at 12. So purchased at 10 was only 10,000, which makes it 1 lakh rupees spent on raw material purchase. So how much was the raw material purchased at 12 rupee per unit? The cost incurred on it was 30,000. So this will give us how many units of raw material was purchased for 12 rupees per unit, because you spent 30,000. So 30,000 divided by 12, it says that you have purchased 2,500 units at the rate of 12. So total purchases of units becomes 12,500. Now, if purchases is 12,500 units, consumed is 14,000, it implies there was opening stock also of raw material. The opening stock of raw material was 50,000, and we follow FIFO. This thing is important. Okay. Opening is 50,000 rupees and we follow FIFO. So whatever the closing stock is, that is at current purchases of 12 rupee per unit. So this will be our closing stock of raw material will be at 12 rupee per unit. Throughout this period, is manufacturing expertise is evident. They successfully produced 4,000 units, 3,800 sold at 100. So first thing that is asked is what is the value of closing stock of raw material? Second, what is the cost of production? Third, what is the cost of goods sold? What is the cost of sales? And what is the cost per unit of goods sold if 3,800 units were sold? All right, fine. So we have all the information here. Company spends 130 on purchasing direct raw material. Labor is 190 and additional direct expenses are 30. Overheads cost are 60,000 factory overheads. Administration is 20. Selling and distribution is 10,000. Ensuring that the product reaches effectively. Quality control is 5,000 and R&D is 10,000. Inventory management is the health. Opening stock of raw material is 50,000. So work in progress inventory starts at 15,000 and increase to 35,000. Finished goods, the company maintains opening stock worth of rupees 30,000 and closing stock of 25,000, showcasing their agile response to demand. So 3,800 units are sold at a price of 100, and this is the additional information. So we'll have to again work backwards. Opening raw material 50,000, purchases 1,30,000, closing stock of raw material we don't know. That's the question mark. So that will give us raw material consumed. Then you have direct material and direct expenses, 90 and 30. Then works overhead, 60. administration overheads 20. Before works overhead, we'll adjust the opening and WIP 15 and 35. This becomes your works cost. To this, you add administrative overheads 20 and selling, quality, and R&D 25. Before that, you will add opening finished goods less closing finished goods. Thirty and 25. So this is your total cost of production, cost of goods sold. And to this, we will add the total of 25,000 of selling expenses. And then you will have sales and profit. All right. Is it clear? Company follows FIFO for inventory valuation, that is mentioned here. 4,000 throughout the period, they are producing 4,000 units, out of which 3,800 units were sold at 100 rupee each. So your sales value is 3,80,000, right? And closing stock is valued at 25,000. So from this information, you can prepare the direct expenses and all this various essential. This is done. Factory overheads are 60. All indirect manufacturing expenses are there. Administration 20 and selling 10. Quality control, right? Inventory management is key to speed. Opening stock of raw material is 50,000. Work in progress is 15 and 35. Finished products, company maintains opening 30, adjusted to a closing 25,000, showcasing their agile response to market demands. So we have manufactured a total of, we have consumed 14,000 units. We have raw material. Consumed is 14,000 units and purchased was only 10,000 units. So here we'll have to make an assumption. That means the opening stock was valued at 10 rupee per unit at the beginning of the period. So if at the beginning of the period, the raw material is valued at 10 rupee per unit and we are following FIFO system. So that means the last purchase was also 10 rupee. So whatever our opening stock is there, 50,000 units, it is valued at 10 rupee. That means 50,000 divided by 10. Our opening stock was for 5,000 units. So now we have opening stock units. How did we calculate? 50,000 and opening price was 10 rupee per unit and we are following FIFO. So the closing inventory would have been at the rate of 10. So it is 5,000, right? Now, if you have 5,000 opening plus 10,000 purchases. So you have 15,000 units in your hand. Out of 15,000, 14,000 is consumed. Therefore, 1,000 units is your closing stock of raw material. And as we are following FIFO, so in that case, what will be the value of the inventory? Whatever will remain will be the one which is, wait, we have not purchased, we have purchased 12,500. 10,000 is purchased for 10 and 2,500 is purchased for 12. Purchases is not 10, 12,500. So you have 12,500 plus 15, 17,500. And out of 17,500, 14,000 is consumed. So 3,500 units are remaining, which are there with you of the closing stock of raw material. Now 3,500, if we are following FIFO, 2,500 is at the rate of 12 and 1,000 is at the rate of 10. Which means the value of closing stock is 35. Okay. So this was the technical point in this question. All information is given. How much is given the raw materials price? Opening 50,000. Then it is saying beginning price was 10. So we assume that the entire opening stock was at 10. And then you have purchased some units at 10 and some at 12. So we know that the total purchases are 1,30,000. 10,000 units at 10 means 1 lakh. So remaining cost of purchases is 30,000. At the rate of 12, it becomes 2,500 units. So we assume that opening stock was of 5,000 units, 12,500 we have purchased and 14,000 we have consumed. This gives us the value of units of closing stock at 3,500. So if out of 3,500 we are following FIFO, 2,500 are at the rate of 12 and 1,000 is at the rate of 10. Total value of closing stock becomes 35,000. So raw material consumed. Now you have 50,000 opening value, purchases 130 and closing stock 35,000. So raw material consumed becomes 130 plus 50, 180 minus 35 or 145. Now this is done. Everything else will cover automatically. 1,45,000 plus 90 plus 30. Is it clear? So this was only the technical point. Once you get this, you will get to have your complete answer. 2,65,000 becomes your prime cost. Works overhead is 60,000. Opening WIP is 15. Closing is 35. Let me check, it is 35. Closing. Yeah, closing WIP is 35. So works overhead will be 40 added. It will come out to be 3,05,000. So 2,65,000 plus 60,000 minus plus 15 minus 35. So 3,05,000 is the works cost. Then you add 20,000 administrative overheads. This becomes your cost of production. 3,25,000. To this you add 30,000 finished goods. So your cost of production is for how many units? Let's say 3,25,000. You are able to produce 4,000 units. So this is the cost of production of 4,000. When you divide it here by 4,000, you will get the price per unit. 3,25,000 divided by 4,000 because that is asked later. So you calculate this information. Okay. 81.25. And then you add opening finished goods and subtract closing finished goods. You have 3,30,000. To this, you add 25,000 another. You have 3,55,000. Okay, as the total cost of sales. And then sales figure is given as 3,80,000. So you will know what the profit is, 25,000 and so on. So what is the cost of production? Cost of production is 3,25,000. A is the answer. What is the cost of goods sold? 3,25,000 plus 3 plus another 5,000, 3,30,000. So cost of goods sold will be 3,20,000. Cost of sales, 3,55,000. Okay. And last, cost per unit of goods sold if 3,800 units were sold. So cost of production is not asked, cost of goods sold is asked. Okay. So once you have completed the cost sheet, rest all of the answers are possible. The only problem in this case study was the first part, how to calculate the value of closing stock of raw material. Rest everything will fall automatically because you have this information put up. So then you keep on calculating. Right? Any questions? Or we can call it a day. Thank you so much. Any questions? All right, we can close the session. Thank you so much, all of you. Have a good day. Yes.